So, good afternoon, everyone, and a very warm welcome for joining us in this session today. I am Abha Ban, Director Organization Development with Simplicity India Investing. Thank you for taking time to be part of Niti, the investor education and learning platform by Simplicity Investing. At Simplicity Investing, our belief is very simple. Good investing begins with good understanding of markets, money, taxes, investments, and sometimes they feel very complex and intimidating. Through Niti, our goal is to break down these complex financial topics into simple, practical insights that help you make smarter financial decisions. So, today's topic is something that touches every professional, every entrepreneur, and every investor: tax planning. For many people, tax planning becomes a last minute exercise in the month of March. But smart tax planning is all about making informed financial decisions throughout the year. The decisions not in only reduces how your taxes or the tax burden is, but also support your long-term wealth creation. Now, to help us decode and simplify tax planning, we have two fantastic speakers with us today. First, let me introduce Mr. Aditya Shinde. Aditya is a partner at VP Shinde and Company, an Indian chartered accountancy firm, and also at VPS Tax Consultants, a Dubai-based firm. He's a generation practitioner and brings over 15 years of experience both as a chartered accountant and as a CPA. He works with a wide spectrum of clients, from entrepreneurs to small businesses to large corporations, helping them navigate through the regulatory requirements and structure their finances in the most efficient and practical way. Welcome, Aditya.
Thank you very much, Abha, for the kind introduction.
Joining him today is our own CEO of some Simplicity Investing, Mr. Rashmi Shah. Rashmi is a CA and a CPA, has been practicing and helping people build wealth over decades. Rashmi has been at the forefront of helping investors understand markets, financial planning with clarity, and most important, simplicity. Through this platform of Niti, he's deeply committed in building investor awareness and financial confidence. Together, they will talk about and walk us through tax planning. The idea of today's session is not just to talk about taxes, but help you think about tax planning in a very smarter and strategic way. So keep this interactive. I hope all of you have a lot of questions, a lot of suggestions, something that comes up your mind. Keep asking by unmuting yourself or type in the chat box. I'll read it out for all of you. So with that, I would like to invite Aditya and Rashmi to take us through the session. Welcome, both of you. Over to you.
Thank you very much, Abha, for inviting me to this.
Thank you, Abha. Yeah, thank you, Abha, for taking this initiative and your team. I appreciate it. Thank you. Welcome, Aditya. Now, I've been a chartered accountant for almost now 1980, so 45 years, and I've heard this question asked many times: why we have to pay taxes? Fundamental question people ask: it's my money, why I have to pay taxes? So, in the initial days, I had a difficulty answering that question, but with experience, I came to this answer that if we are living in a jungle, we don't have to pay taxes. No? But if we are living in a society, we have to pay taxes. Society is built on the taxes we pay. So if you look at today, if you look at the African countries, Afghanistan, Iraq, there are no taxes. You can get away with Pakistan without paying taxes. Sweden, America, Australia, India, very high taxes. But then the society is organized, correct? And we earn more money. We send our children there. So taxes is a very important part of our life. Understanding how you manage your taxes and how you do it correctly is very important. Now, I'll give you another one small example so you'll understand. My grandfather, my mother's father, he had almost 200 properties and he never paid taxes. he used to never register the property in his name. He used to do the agreement of sale, buy the property, and keep it. And once he passed away by heart attack, his children didn't get a single property of those 200. So had he paid taxes, his children would have got those properties, wealth would have passed on. So you have to legalize your wealth. If you don't legalize your wealth, then the money doesn't go anywhere. And you cannot, your family can't use that money. And that's why understanding of taxes is very important. And other thing also I've noticed, ignorance of law is not an excuse. Just because you don't know what taxes are and you don't pay anything, that is not an excuse. Mm, Ignorance of law doesn't stand in the court. With this, I'll stop. I'll Aditya, welcome. You want to say some initial words, and then I'll take it from there.
Very, very well said, sir. Firstly, thank you, Abba and Shah, sir, for inviting me to this series. Uh, Looking forward to more such series which you have been organizing for educating all the public at large. And, yeah, uh, we can
Yeah,
start.
the other thing I'll also mention, though I'm a chartered accountant and a CPA, I don't do my own taxes. I take Aditya's help in doing my US taxes, and I take another CA for India taxes. So even in spite of I'm being a chartered accountant, I don't do my own taxes. I give so much importance to the taxes. So we all need to, and I've been working with Aditya for the last 7 years on US India taxes. He's extremely knowledgeable and next generation chartered accountant. I like to work with young people. He's very nice. Now, coming back to Aditya, the first question, uh, what is the difference between tax avoidance, tax planning, and tax savings? What is the difference?
So people mostly think that tax saving and tax planning is one and the same. Tax avoidance is altogether not showing anything at all. So that is tax avoidance. But if you plan out and you pay less taxes through proper rules and regulations, that is called tax planning. Tax saving. So let me tell you through an example what is how we can say what is tax planning and what is tax saving. If you want to go to Kanyakumari and you stop wherever you see an hotel, you stay there, and wherever you see a place, you visit there. That is something called as tax saving. We are going, okay, I am taking an LIC policy, I'll claim the deduction. I'm buying a home, I'll claim a deduction. That is called tax saving. जो मिल रहा है वो अपन लेते चलते हैं. But tax planning is if I'm going to Kanyakumari, then I stop, I see all the tourist places, I stay at the best places. So then I create, so in tax terms, then I create an HUF, I do capital redemption planning. This is called tax planning. So tax planning is having a longer horizon, proper planning with vision in mind.
Thank you. Very good. So now, when does the tax planning start?
Tax planning. So today we are sitting in March. March is the very month which you don't do anything actually. But unfortunately, we all start planning in the month of March. Due to this, all the decisions, all the planning what you do is has to be taken hastily. So planning has to start early, that is on April, and has to start way before you take any decision. So if you want to go US, you can't say today I want to go US and I'll start packing out my bags. You have to plan 1 or 2 years before that I have to go to US. So that is what how the tax planning should work. You have to plan way before you do anything.
Yeah, very well said. It's like, we're going for a walk after I get a heart attack.
Yeah.
You should go walking from beginning, correct? Then you don't get a heart attack. So tax planning has to be done from day one when you start earning income. You have to, and the best part of tax planning is you need to consult a proper professional and work with them. Be very upfront and tell all your details, like your family members, your liabilities, asset, and then you structure your income in such a way that optimal tax planning. Very good, well said, Aditya. Then my next question is, what are tax saving options for individuals? What are the tax saving options for individuals today?
So there are many tax saving and tax planning options. I'll talk on both. So you are the deductions which I talked about earlier, that is ATC deductions, ATD deduction, that is LIC policy, having Mediclaim. Then something new has come up is NPS, National Pension Scheme, wherein you can invest and you can take a deduction on it. Further, going further, we can also have an HUF. HUF is like having one more person in your family. Now, from this year, you get 30% taxes applicable over and above 23 lakhs. So similarly, you have one more person whose income is not taxed till 30%, highest tax will above 23 lakhs. So HUF is that kind of person. So these are the tools which a normal person can use to plan their taxes and save their taxes.
Now, can you give me a very good example of a tax planning in case of family? How you do tax planning for children?
Okay. So recently I also had a child. So say I keep on today I invest money in his name in say share market or mutual funds. At the age of 18 or age of 20, I want to buy him a good house property. So at the age of when he becomes 20, I sell off all of the mutual funds and buy a house property. If I do this and I claim an exemption under 54, section 54, the complete tax on this gain is exempted. So that way, buying a real estate without paying a single penny in tax.
Yeah, very good, Aditya. So last members, I would just like to give an example. Last year we had two clients. Um, One client had a investment of about 15 crores in mutual funds, and he made a profit of 8 crores. He had a profit of 8 crores, and he didn't own any house property in his name. So what we did, we sold the entire 15 crores portfolio, and he bought a bungalow of 15 crores, and that entire 8 crores of long-term capital gains, which he had to pay 12% tax on that, got exempted because we invested the entire proceeds in buying house property. So that was a very good case, eye opener. So what Aditya is saying that if you have a child, from your income every month you save, let's say you start saving 1 lakh rupees a month in your child's name for 15 years. So at the end of 15 years, you have saved 12 into 15, 1 crore 80 lakhs in your child's name, and then 1 crore 80 lakhs becomes 5 crores when he turns 18. That entire wealth will be transferred to your son or daughter at the age of 18. And if they sell and they buy a house property, there is no taxes on that. So you created an asset for your children. That's a very good way of doing it. I don't think many people in India are aware of it. Am I right? Aditya, how many cases you do like this in a year? How many
We
people
do
are aware of
quite
this?
a few. Yeah, no, quite a few. It's just that people see the path is very important. What people do is they keep they keep the savings for their child, but not see the taxation is different for different products. For mutual funds, it's when you sell, but for FDs, it's every year. So that is where we plan. We tell them not to invest in FDs because even if there is a gain, you are already paying tax on it. So you have to put it in such a product that the tax is at the end of the time. So we do
Very,
quite
very
a
good.
few quite a more cases every year for tax planning on this front.
You're very good. So, Aditya, so members, I'll just give an example what Aditya is saying. That let's say you have a 1 crore FD bank deposit in India, on which you get 8% interest. On every year, whether you encash the interest or not, on that 1 crore, you get 8 lakhs. On 8 lakhs, you pay 30% tax. I'm assuming you are in 30% tax bracket or 25% tax bracket. So on 8 lakhs, you are paying 25% tax, which is 2 lakhs. But if you invest that money in a debt fund, you don't pay any income tax. You pay income tax in the year where when you encash the debt fund. So if you encash the fund after 5 years, you're paying the tax after 5 years. So you're compounding your income. So this is a very good way of tax planning. And in the year when you encash that fund, you may not have any other income. So your tax slab may come down. You can plan it. Am I right, Aditya? That's what you're saying, correct?
Correct, sir.
Very good. Now, what are the tax planning strategies for businessmen?
So for businesses, there are quite a few, and not many people are aware of this. One of the new exemption which has come, our deduction which has come up is employee salary deduction. If you hire new employees, you will, and you if you're keeping them for 3 years, government is going to pay 1 year's salary for them. So they are giving one third salary deduction each year of the total amount of salary which you pay. So that not many people are aware of. Uh, then there is a deduction for startups. Startups gets 3-year tax exemption for all the profits they make. In any of the 10 years, they can claim any 3 years tax free period. So that is one. Then there are 80% up to 80% deductions available through subsidies as well for new businesses setting up in manufacturing. So that is how you plan and save on taxes. So quite a few deductions are available for businesses.
Oh, very good, Aditya. That I have noticed another one case here. Let me add. We at Simplicity, I also encourage businessmen uh, and enterprises to use treasury income as for tax planning. So every business has some cash flows, and I invest in such a way that you defer your taxes at the same time. You use that money when you need the most. Let me give an example. Simplicity, the biggest cost is salary, employee salary. Now, our business doesn't go up every year. It's cyclical business. So I need to have 2, 3 years of salary in my bank to tide over a bad year. So what I do, I keep that money in mutual funds and I tide over the bad year. In the bad year, I book that profit and pay taxes. So this is also another way of using a treasury income in businesses in smoothing your tax rates. Yeah, very good, Aditya. And what are the common mistakes people make while paying taxes?
Mm, while paying taxes, common mistake what they make is first what I in normal, very normal people not paying advance tax is the one of the main aspect they don't do. They don't pay taxes in advance in and at the end of the period they end up paying interest at the rate of 12% for the unpaid taxes, even if the money is lying in their bank accounts. That is one of the common mistakes which I feel that people don't do. Second is investing only for saving tax is also one of the main mistakes, wherein the wealth building is not done. So these two I feel are the common mistakes which people do.
Yeah, very well said. So I have experienced in my 45 years of life that businesses which plan taxes well and pay taxes in time, they do very well. They do very well. Their businesses grow, they scale up. The people who don't pay taxes come in the last minute and do all kinds of adjustments. Their businesses don't survive a downturn. I've noticed that. Yeah. So there is if you look at, I'm sure, Aditya, in your firm also, you must be experiencing that. The clients who are very well to do, why they are well to do? Because, and clients who don't make money, correct? Who come on the
Yeah.
last minute. Aditya, are you there?
Yes. Correct. Yeah, sir. I'm there. I'm there. Yes, sir. So last minute planning is it always you if you want to Goa, you can do a last minute backpacking. But if you want to USA, you can't do a last minute backpacking. So
Yeah, very,
definitely you have to keep a good horizon and you have to uh, do proper planning in time.
yeah, good, good, good. Now, Aditya, can you throw some light how taxation has changed 10 years, 15 years before and today, especially with people living globally, like people like me who file taxes in India and US, and there are families who one family member is in India, one family is abroad. We also see family member, husband is Indian citizen, wife is US citizen. All kind of complications you see, correct? So,
Yes, yes.
how do you manage that? What do you do that?
So I'll break your questions in two parts, sir. One is how is the taxation 10 years before and how is the taxation now? Earlier, and the second question what you have is what about the global citizens now? So answering the first question, uh, 10 years back and 10 years now, earlier government did not had any information what we do. Now government has all the information. They even have how much cash we are depositing in our savings account, how much mutual funds we are buying and selling, what kind of car we are buying, how much credit card usage we are doing. So now, due to technology and due to AI, which the government is also using to select the cases, they have all the information, and that the government is being transparent to give us that as well. I know everybody must be aware of AIS, wherein they can track all their statements. So even if you go to foreign, the government is going to know that you have been traveling. So that is the difference between 10 years back and now. Now coming to global citizens, yeah, things have become very much complicated now. The world is growing smaller, and everybody is having one or the other person or business or income from outside. So while while talking about cross border, the main uh, aspect people need to look into is first is residential status. They need to plan their residential status properly so that don't end up paying heavy taxes on each front. Because I also consult in a region which is no personal tax region, which is Dubai. So, and if I keep on traveling to Dubai, if I stay there for more than 182 days, I don't pay tax income which I earn outside India in India. So, maintaining your residential status is quite important for these people. Secondly, understanding DTAAs. So, you have to manage both USA and India or Dubai and India or any other country. So you need to understand what does DTAA provisions have. So say for US citizens, the social security benefit is not taxed in India. So taking the benefits of DTAA, which India has almost with all the countries. So taking the benefit of DTAA is very important. And one more thing I need to add is you need to have a proper consultant who knows both the country's taxes. Today, if many of our consultants sitting in India are giving services to USA as well, now they will deduct TDS and pass on the money. So ultimately, then you have to pay tax in USA also, claim that credit in India, which complicates the thing. So there is a provision in USA wherein you can apply for nil deduction of TDS as well. So these kind of provisions you need to be aware of and plan out your structure. Planning out a structure is very important for global citizens. Planning there, where do they want their money? And sir's question, which is very important, where do you want to die? Or so put it in harsh words, where do you want to retire? So these two, if you answer these two questions, I think you can sort of all uh, all the planning front from their wealth and their next generation.
Yeah, very good. So,
So,
I-
Rashmi, before we move ahead, there are two questions that our viewers have asked. I would want to read out for uh, Aditya to answer. One is how and on what basis should we choose a tax regime?
Now, government, day by day, government is making very lucrative to select the new tax regime. But based on your deductions, how many deductions you have, on that basis, you choose a tax regime. And those are not just your normal ATC, ATD deductions or your interest rate deductions, but also your future planning under which exemption are you going to claim, that also is necessary. Say, for a business person choosing, who's an individual who's doing business in his name, if he chooses a new regime, he can't claim certain income tax deductions. So just going by the flow is not important. You need to understand that if you want to have certain kind of deductions, you need to study what is applicable to you and then only select a regime.
All right. Thank you, Aditya. There's another question, which is how to plan sale of employee shares lying in foreign bank. The selling currency is Swiss franc and taxpayer is Indian. The holding uh, is over 5 years.
I need not plan my tax file tax receipt. No. So two things. I think I am also reading that. Uh,
very good
firstly, we need to
question.
Firstly we need to understand what are the taxes in Swiss, if it is in Swiss francs, what are the taxes being applicable over there? Being a tax resident of India, your global income is taxable. So you anyhow, even if that income, if the capital gains are exempt over there, you need to still file your taxes in India and pay taxes over here. If you pay any kind of tax in the foreign country, make sure that you claim that as a deduction in India.
Very good, very good. So let me elaborate a little more on this. We get a lot of cases like this. Recently, I got a case. One of my client was moved, said I'm going to move back to India in the month of June. So what should I do my overseas investments? And he's moving back to India permanently. So what I told him before 31st March, that is before this 31st March, sell all your foreign investments, book capital gains, and they are exempt in your country, and when you come to India in the next year in June, this amount won't be taxable. Now, had he not sold those tax amount and he comes to India and he sells next year, he'll have to pay tax in India. So when you change the country, it's very important you take advice of a professionals like us. So I'll give you another example. If a person is moving from India to America or Europe or Middle East anywhere, and he has PPF account, now, as per the law, you are supposed to close the PPF account. If you do not close the PPF account, NRIs cannot have PPF accounts. Now, if you don't close your PPF account, there's a heavy penalty. Government never used to track this till 5 years back. Now they started tracking it and they're charging penalties. Penalties double the amount of interest what you have earned. So the other example I'll give you, if you're moving from India to America or anywhere, you have to close your local account, move it to NRO. Coming back also you have to do that. And you must book your capital gains based on your situation. We'll advise you what to do. Because this is very important. Don't go to the tax advisor after everything is done. Go before you move to the country. Before you take a new assignment. It's very important you do that, which people were not doing till last year. Now the awareness has gone up. So things are changing, which is very good.
Yeah. I think that
Yeah.
is the best advice. Precaution is better than cure. I think
Yeah,
that's
yeah.
what exactly it is. Thank you.
Mhm.
There's one more question before you go ahead and have the chat again. If my income is below 12 lakhs per annum, does that mean I need not plan my taxes or file a tax return?
No, even if the income is below 12 lakhs, that is an exemption given. That is not the basic exemption limit, but that is a deduction given. So you still need to file your taxes, even if the income is below 12 lakhs.
But what is the minimum threshold where you have to, above 5 lakhs, you have to file your tax returns, correct?
Correct, correct.
Hmm?
Yes,
So
sir.
if your income is above 5 lakhs, you have to file your tax return. And let me add one more thing. To be rich, you have to, rich people pay taxes. So you want to become rich, file your taxes.
All right, great. Continue with your conversation and thank you for this break.
Yeah, yeah.
Please
Good
do type the
questions. Good
question.
questions. Yeah. Can you throw some light on corporate taxes, Aditya?
Which taxes? Sorry.
Corporate taxes. India, US,
Okay, okay.
Dubai
So,
corporate taxes. So you work on the
okay.
international front, correct?
Yeah,
Yeah. So
yeah. India, I think everybody knows. I'll throw a line something on based in Dubai. Recently, Dubai has introduced corporate tax, which is at 9%. Initially, there was a no tax regime. Now, UAE has become a low tax regime. That is just 9% taxes on corporate income. However, there is no personal tax. So, if you are a resident in Dubai and you are owning a property, or doing any investments, or having any investment income, that is not taxed at all. Earning salary income, not taxed at all. So global salaried person who is getting salary from USA, if he relocates from India to UAE, he doesn't have to pay any taxes in UAE. However, if you're doing any business in Dubai, then definitely yes, you have to pay taxes over there.
yeah, now other pattern I've noticed, rich people decide to move to the country based on their tax regimes. So a lot of people have moved to Dubai to save taxes. Uh,
Correct.
Dubai is one of the tax havens of the world, correct? Yeah. Now, what about US taxes? What do you like to say about US taxes?
Now, many people sitting in India earns money from USA or having both green card as well as resident of India. So, firstly, what I would like to tell is disclosing all your income. You have to file taxes in India and in USA as well. Make sure that you file all the forms. Uh, in USA, you file your FBARs. You disclose more peculiar thing which India and USA has is your investments in mutual funds. Those are called as PFICs, passive investment companies. So those mutual funds are taxed on mark to market. If you don't do that, you end up paying around 40% of all taxes. So make sure that these things you disclose properly, and then uh, and make compliant. You do proper compliance with USA and India as well.
Okay, thank you. So, US taxes also are becoming, we file, we have a lot of clients who do US, for whom we do US taxes. And Aditya helps me there. Thank you, Aditya. Then my next one, what else, can you name some of the uh, myths about taxation? People have wrong assumptions or wrong myths about taxation. Hmm?
Okay. For very common person, they say that tax saving means investing in insurance. So that is very common. So I feel that is not correct. So tax saving is not investing in insurance per se. That time has gone now. Tax saving in investing in proper structures. If you prepare a proper structure, then you can save a lot of taxes. Second, one of the other thing is cash transactions avoid tax. So two things I would like to add over here is not all kind of cash transactions avoid tax. So even if you're withdrawing cash from your bank today, government tend to know. If you go to foreign, do expenses in cash, government tends to know. So this is a myth that doing everything in cash and government not know anything. So that is one of the myth I would say that is not correct. Uh, one more thing, my foreign clients tell that we are NRIs, we are not bound to pay any tax in India. We are not required to file any taxes in India. So I feel that is also not correct. NRIs for earning income from India or any income which is sourced out of India, even if capital gains, needs to pay taxes in India. So that is something which is important for our all our NRI friends out there. Uh, and tax planning is only for big businesses. Okay, I'm salaried person. I don't need to do any tax planning. So let me tell an example for our salaried friends over here. Planning, if you take salary, you have specific deductions. But instead of taking salary, if you take professional fees, you can claim exemption or deduction up to 40-50% of your income. So planning out a proper structure even for salaried people is important. You plan taking a dividend or taking ESOPs. These are a kind of decisions or structures we can put in place to save that taxes as well. So yeah, I think that is it. Any other myth if you want to add, Mr. Shah, you can please let me know.
Yeah, I would say the biggest myth is cash transactions avoid tax. So here the most common example comes of doctors and lawyers. Today they don't want to. So I tell them you should pay. See, we professionals we have to pay GST and then pay income tax. Well, doctors don't have GST, lawyers don't have GST. They have only income tax. Still, they would take money in cash and don't account for it. But what happens? I've noticed in case of doctors and lawyers that they don't create wealth because they once they're regulated, if they don't file taxes, everything is in cash, wealth is unaccounted for, and in the end, it goes in the wrong direction. Like I always give example, Karna was very talented, but he was not on the wrong side. He was not legalized. So what happened? He died. Pandavas were less talented than Karna, but they won. So your white money, your paying your taxes is the right thing to do. So cash transactions you should avoid. Yeah, everyone should
Sure.
avoid. Uh, and I'm not saying this from a nationalistic point of view. I'm saying from a selfish point of view. Yeah, if you want to become rich, do the right thing. And that myth is there, correct? Then the other thing, many people find that foreign bank accounts are invisible to government of India or government of US, which is also not true. Today, everything is connected. Everything is connected. You all need to do that. And don't, and the other thing I've noticed, people go to an advisor at the last minute. Don't do that. Go to the advisors from the beginning. Or other third point, I've seen people have multiple advisors. Then you get more confused. It's like I'm having three mother-in-laws. Hmm? I'll get more confused. Go only have one mother-in-law. Have one advisor. If you don't like him, change him. Find it. But do not take multiple opinions and then confuse yourself. So these are some of the myths I have noticed, and I'll stop here. Maybe next
I,
time we'll come with a more detailed, more specific topic wise. If any questions are there,
I
uh,
would like to add, sir, over here that firstly, for any advisor to help all, so this is I tell to all my clients, for me to help you, firstly, you have to tell me all the facts. Some people don't
yeah,
tend to tell everything to the advisor. They feel that they'll take advantage or he'll charge more fees or I don't know what they feel is. We have been working with three generation and each generations we have been honest to us, so we know their history. But whenever a new client comes up, there is always a hesitation. If there is a hesitation with your consultant, he is not the right consultant you are with. You have to be up and honest. As you go to doctor, or if you don't tell the doctor there is a pain in my stomach and this is my body, so he will not be able to help you. So he to know what is the structure, you have to be honest about what is the situation, what you have to do, what I have to plan. जैसे the example, sir, you give very nice example which you gave of Karna, because it was illegitimate, it did not win. But there was a time in Mahabharata when Krishna went to Karna and told him, "Ki there is a chance that you can come to the Pandava side and be the leader." So a consultant is that person who you can go
very good.
and the consultant can help Karna out there.
Yeah,
But the Karna has to be honest, fair, and listen to the advisor.
yeah, people
So
don't do
that
that.
is it.
Yeah, yeah,
I'll
yeah.
keep
Thank you,
just
Aditya.
open to
Thank
the
you.
audience.
Very good, Aditya.
Yes,
Very good. If anybody, Abba, does anybody more questions?
Not yet, but I have few questions that I would want you guys to definitely help us understand a little better. Someone we did not cover are actually self-employed professionals who are freelancers. So how should a freelancer or a consultant structure their income to optimize taxes?
Hmm.
So there is a very good income tax scheme which has come up for professionals. That is 44 ADA.
Okay.
Uh, if if that the government tells that we don't care what kind of expenses you do. If you, as long as you disclose 50% as your income or whatever you are earning, we are happy. We are not going to question your expenses. Because initially professionals, it is difficult for them to maintain and record all the expenses and records and accountant and all. So for any young entrepreneur, that is the best scheme which they can go in. If if you are in a bigger scale and if you are earning, then I would say that then you need to go into tax audits. You need to get your books audited and don't show 50%, then you can show what the actual expense income is. So that way, depending upon what stage of your business is, you can plan out your taxes.
Okay, that's great. Thank you, Aditya, for sharing that. There is a question that was coming to my mind that I'm sure there are people who would already have been, doing their tax plannings and everything. But if someone is there who has never done it, okay, what are the first three steps they should take today after this session if they understand?
So doing things as of now, first, if we are setting in March, people in March can do tax harvesting. Say if you have any losses, you
Yeah,
can book capital gain against it so that you can set off the losses So that is one thing we can do in sitting in March. Second is there is an exemption of capital gains up to 1 lakh uh, for long-term capital gains. So if you have 5 members, you can book a game up to 5 lakhs and pay zero tax on it. So that is something which you can do. Uh, Third is discussing the structure with your consultant. What kind of structure? Am I in the right structure of my company, of my business, of my salary? Say dividend, ESOPs, private limited, partnership, HUF. Decide the structure today so that from 1st April you start working on it. March is the month, or 1st April rather than 31st March for me. 1st April is more important, wherein 1st April you have to start the new structure. So this session is not for the March end, but this session should be for 1st April for people to plan out their structures.
Great. Thank you so much, Aditya. One question that was the last that was coming in my mind, and you just touched upon it, is the structure and the structure of HUF. Okay. Who should go for HUF? And if at all we should go, what is it that we should look at?
HUF, every if you have a family, then definitely then you should go for HUF. There are advantages and disadvantages both of HUF. It is not that everyone should go about it. HUF gives inherent right each member to claim the property of HUF, even if a boy, even if it is a child but that is only limited to Hindu because in its HUF is Hindu undivided family. Uh, the disadvantage, so that is that advantage and disadvantage both. From a tax perspective, it is recognized as a separate legal entity. So you have one more entity in your family, which is called an HUF entity, under which you can claim up to 26 lakhs uh, income, which will be below 30% tax. So that is the main advantage. Second advantage is generational wealth. That HUF can be passed on year to all your family members. So it also acts as a family estate. But there is a difference between again an trust planning and an HUF. So based on the family needs, if a girl is married, the boy is an unmarried, even though the married girl has a right in the HUF, then what kind of structure you should keep? Should you dissolve your father's HUF and you should inherit your HUF? So these kind of planning a person should do while forming an HUF.
Great. Thank you so much, Aditya. That really helped. And Rashmi, there's a special request that suggestion has come that next time to have a session on estate planning.
Oh, sure. Yeah, we'll do estate planning, succession planning. Uh, yeah, sure, we'll do that. But we'll do that in the month of June or July, not next month immediately. Yeah, we'll do that in the month of June or July, where we'll be more better equipped and all that. Because estate, the other thing about HUF I would like to add, HUF should be done only for families whose all members are going to reside in India. If the kids are going to go abroad, you have only one son or one daughter, and they go abroad and you stay in UHUF, then succession becomes very difficult for them. The money after you pass away, very complicated, very complicated. Now, if your income is low, don't do HUF. Only if your income is in lakhs and crores, then do HUF. Economies of scales are very important. So take advice of a professional. Just don't do HUF for the heck of it. Uh, you should have a really uh, vision of your wealth and your business and income and then do it. Think through and do it. Otherwise, you end up creating a lot of paperwork for yourself, which is also not advisable.
Yes.
I also like to thank all the people who participants, and I also see some of my ex team members who have joined the session today. Good. I appreciate them coming to learn here. Thank you very much. And thank you, everyone. Everyone.
Okay. Before we just go, thank you, Rashmi and Aditya. Thank you so much for such insightful and practical discussion we had today. With this platform, it was extremely great to have the two of you sharing your knowledge and such practical advices for all of our listeners here. We hope to take it much forward. Niti will be platform for all our investors and in general for anybody who wants to learn. So at Simplicity Investing, we will continue to have conversation that will simplify finance and empower people to take, great financial decisions. And thank you so much, Aditya. And thank you, Rashmi, for joining us today.
Thank you, Abha. Very well
Thank
organized.
you. Thank you.
Thank you,
Sabha.
Aditya. Enjoy
Thank you.
working
Thank
with
you very
you.
much,
Thank you.
sir.
Bye. Bye. Bye.
And
It was
thank you,
good
everybody,
talking.
who
Thank you,
joined us
all the
today.
participants. Feel free to give us your critical feedback. Thank you very much.
Thank
Bye.
you.
Thank you.